I guess my feeling is for someone starting out that they pick something that they feel comfortable with from the concept point of view. If the idea of stock investment feels comfortable to them, I would stick with that. I wouldn't do both at the same time. Or futures, if they like the idea of maximizing their capital. If they're comfortable with the idea that there's an expiration. Some of the issues, because there are different investments. And some people say this is better than that. That's not true, in my opinion. They're not better, they're different. So it's important, either one, that we understand what those investments are. And whatever our interest is in, then I think that's the direction you should go, but not both at once. And also not to trade the entire stock market at once either, because that feels overwhelming. Same thing in the futures. I see so many people who want to trade the futures markets. And what do you trade? Currencies, indexes, all these different markets they can look at, and they feel overwhelmed. So I think it's important to narrow that choice. When I started in the options exchange in Chicago. Then I went over to the Board of Trade. And what I did there is I picked one market. Now, at that time, it happened to be the U.S. Treasury bonds. That was the hot market. But I understood every nook and cranny of how that market moved with respect to my strategy. Not only does it limit some of the feeling of being overwhelmed, but it also allows a foundation to be put in place. So that now if you and I understand this market well with our strategy, when it works, when it doesn't work, how much risk, how much profit, how much time to give that trade, then I can relate that to other markets. So if you and I want to trade stock indexes, because we find that interesting, then I can relate that to currencies. How do they trade that's similar? How do they trade that's different? And if I understand that first market well, I'd say, oh yeah, this doesn't do that at that time. Or this is very aggressive at this time. So it allows me to use that as a reference to other markets that I want to trade. So that's why I feel it's important to narrow that choice, take our time, and treat it truly as a business. My equity run is my production report, is the way I look at it. I think the last component, Tom, that I think is important is not to take it personally. There is no personal connection to the market. The market is a perfect trading partner. It doesn't say, oh my God, you're back here again. I can't believe you're going to do that again. And you're going to buy? Oh my, it doesn't do that, as we both know. What it does is it's there to be there for us. It'll take the other side of our trade. Our inventory always stays liquid that way. So I think it's important that people do not take it personally, that they look at that and say, did I make the right decision? Did I follow my strategy? If I did, good job. Am I going to have losses? Absolutely. Am I going to have profitable trades? Well, we should if we were following our strategy correctly.